Woo! I hope everybody's ready for the next few days in the stock market, folks. We have absolute insanity going on the next few days. I want to get you guys ready for kind of everything that's about to transpire here. We got some massive earnings that are what I call market movers. These ones will move the market. I got some personal companies reporting this week that I think are important companies to kind of pay attention to and whatnot. So yeah, busy week, guys. I wish everybody the best of luck this week. I'll keep you up to date with everything going on. As always, I appreciate you guys joining me. Also, if you're looking to join my private stock group and get access to the private Discord chat, all the course curriculums, things like that, check out pinned comment down there to apply, and we'll see if we can get you in there this week. Okay. So first thing the market has to deal with is Monday. Okay. So Bed Bath & Beyond, that whole shakeout, the whole meme stock situation, growth stocks got absolutely obliterated on Friday, and everything got just trashed. Okay. Even risk on assets such as Bitcoin, Ethereum fell huge on Friday. Essentially, it was ugly times ugly. So the rest of this fallout is going to happen on Monday and maybe leads into a little bit Tuesday, but I think Monday will kind of be the final day for the fallout. So just get ready for likely, we'll see what happens, but likely some more damage kind of in anything that is a little more speculative, more growth related, or anything, Wall Street Betsy type things. The rest of the fallout is going to happen Monday. So we got to work through that as far as the market goes on Monday, okay? Then Monday after the bell, Zoom's reporting earnings. So Zoom's a stock that's less than $100 now at this point in time. Obviously, a very famous company that's blown up over the past few years with everything that happened with Rona, right? Everybody Zoom meetings, right? Now, a lot of companies have gone back to work in person. So that's obviously something that hurts Zoom at least a little bit. Also, they do have a major competitor in Microsoft that competes kind of directly with them, right? But this company, it's interesting to see what's kind of transpired over time, because this went from a company that used to trade at a ridiculous price to sales ratio, a ridiculous forward P and a ridiculous P ratio, to now it just doesn't anymore. Now it actually looks like a pretty darn fair valuation at this point in time, right? Now, does it have the crazy growth it used to have? Absolutely not. This is not that sort of stock anymore. But at least nowadays you can look at a P ratio for this in a forward P and be like, okay, I can see why I should pay a 20, 30 something in there, okay? So big difference with the stock. Also, analysts expect the stock to go up over 50% over the next year. So that is something to kind of keep in mind here. 52-week range, it got all the way down to $79 at one point, $357 obviously. When this company was at its highs, this was when I'm talking about it reached highs in early 2021, if I recall. When this company reached its highs, we're talking about, this was like $140 billion market cap, if I remember correctly. $150 billion market cap. It's $29 billion. So it's a very different valuation you're paying at this point in time. And this is Cathie Wood's second biggest investment in the main ARK fund, okay? So this is obviously a stock she believes tremendously in. Now, to be fair, Cathie Wood's got pretty much trashed on just about every single stock over the past, let's call it 12 to 18 months. But, everything kind of growth stock related, which obviously is a lot of what she owns, has been pretty much trashed over the past 12 to 18 months. So we do got to keep that in mind as well. It's not like it's only her stocks. It's just about anything in relation to those sorts of higher valuation type names. When you're in a risk off environment, no one wants to own, those sorts of stocks. But some of these stocks, like a Zoom, have basically gone from, it's a crazy high valuation growth stock, speculative, to now Zoom, you look at the stock and it's trading like it's a value stock now, to be quite honest, which is a very different. The investor base in a Zoom now is going to build out to be a different investor base than the old investor base. The old investor base was, oh my gosh, it's super growth, it's hyper scaling, blah, blah, blah. It's so exciting. Yeah, pay any valuation for it. To now, people are looking at it like, yeah, it's a company that could grow, revenues 10 to 15% a year. They're profitable, nice cash flows now at this point in time, and just going to build bigger over the coming years. So, I'll pay a 24p for it, and that's just, fine. So a very different kind of investor base, but it's interesting because Cathie stays invested in this, although it's basically going to start to build out into a value stock more than a growth stock now at this point in time. And the company, by the way, and a lot of these companies are now in their fiscal 2023, so don't get confused when you see current year 2023. That's this year we're in right now. It's just their fiscal year has already started at this point. So the company has very low expectations, only 10.7% revenue growth for this year. Next year, the company is expected to have a reacceleration of growth to about 12.7%. So yeah, it's that sort of company now at this point in time. It doesn't have huge expectations. Expected to do $4.5 billion in revenue this year and about $5 billion next year, which, for a company in this space is a pretty fair, let's just call it price to sales ratio for this particular space. So some industries that, if it was trading at this type of price to sales ratio, it'd be like, what, a 6 or a 7, something like that. But in this space, with how profitable a business model like Zoom is, pretty darn fair. So that one's going to be kind of a mover and shaker because that's going to affect the whole Cathie Wood bunch of stocks, the whole ARK ETF, and it's going to affect a lot of those, let's just call it more growth related stocks. Okay. Look at the balance sheet on this baby. Okay. I got to say it's pretty darn attractive. I have $0 invested in ARK. I have $0 invested in Zoom stock. But I got to say it's a little intriguing now at this point in time. Total assets of nearly $8 billion in this company. Total liabilities at $2 billion. We're talking about $6 billion in just equity in this company now at this point in time. So yeah, it's gotten pretty darn compelling. Let's put it that way. And it will be a shaker. Dick's Sporting Goods, DKS, is reporting Tuesday morning before the bell. Now this is a confusing, interesting stock. This will shake up retail on Tuesday. And when it comes to this company, first off, it trades at an insanely low PE. Under a 10, you got to be flipping my flapjacks. But this one's very confusing. And I mean extremely confusing. Because on one side, this was a company that was helped massively from Rona. The reason being is when Rona happened, right, in basically from, let's just call it April 2020, all the way through kind of the back half of 2021. What happened? Everybody all of a sudden didn't want to go to the gym or couldn't go to the gym, so people started ordering weights and all this stuff to make gyms at home, essentially, right? Bikes were selling like nobody's business, so Dick's was selling out of their bikes like crazy, right? So they had this like direct benefit from people buying all this at-home workout equipment and things like that, right? And it was a huge help to their business. But on the flip side, some parents either didn't put their kids in sports or they couldn't put their kids in sports because some sports leagues were shut down, especially in 2020. They started to come back a little bit in 2021, right? So if you think about this for a moment, there's definitely going to be, like, sports is going crazy again. Like, parents are putting their kids in all types of sports again, so they're benefiting from that. But is it enough to offset all the people that were ordering benches and treadmills and bikes and all those sorts of things? And that's a real question for this company, right? Here's a deal. They're expected to grow revenues almost 8%. That's going to be tough. Tough, man. Really, really tough. So I'm a little scared for DKS's earnings and what that could potentially do for kind of the retail sector on Tuesday. Overall, the company's expected to basically have revenues go down this year, 4.1%. And once again, they're another company that's kind of in their fiscal year 2023. But look at the EPS, $15.70 EPS last year. This year expected to do 1087. That's a massive drop off in EPS, and this is just one of many various reasons why the market has dropped this year. On top of all the worries, it's when you look at some of these companies and they're expected to have earnings per share go down. No one wants to see that, and that's the sort of situation that makes people feel more confident about a recession, more confident about, the stock market deserves lower valuations than it did a year ago. And that's just kind of the bottom line when it comes to that whole situation. Now, here's the deal, okay? I own a stock called Foot Locker, which is obviously a retailer that I think almost all you guys know, okay? Foot Locker, they reported bad earnings. What did the stock do? It went up 20%. And this was when all those other stocks were dropping like flies on Friday, right? And the stock went up 20%. So the thing with DKS is they could potentially report disappointing numbers, and maybe their stock pops huge. You never really know in these situations. You can't be too confident, even if you think the numbers are going to be bad. That's what happens sometimes, okay? Now, another company, this one I personally own, is reporting Tuesday after the bell. Nordstrom, okay? Now, Nordstrom's a stock that's done me very, very well over time. I own this in my dividends only account along with Foot Locker as well. And stocks treated us very, very well. Now, Nordstrom is in a very interesting position. They're reporting after the bell Tuesday, and everybody looks at Nordstrom, okay? I'm pretty darn confident in what Nordstrom's going to report for numbers. I gotta say, okay? Very, very confident in what we'll get into in just a moment. But as far as this current year, basically Nordstrom's expect to have about 6.5% revenue growth, and analysts expect like nothing next year, 1.9% revenue growth next year. I'm feeling pretty darn confident in Nordstrom, and this is not a company that necessarily benefited in any meaningful way from like the whole stimulus thing. Okay, there's definitely some retailers out there and many companies that definitely benefited from like the stimulus and the stimulus crowd and like money being pumped out there and everybody having stimulus checks and things like that. Nordstrom is not really, that's not really like the clientele, the customer base that a company like Nordstrom has, okay? Here's the deal. This year, Nordstrom is benefiting from two things in a major way, okay? One is back to office. Tons of companies are going back to office. You hear from all the big techs. They've all started to go back to office this year, okay? And especially started in the springtime, essentially. And if you're talking about forcing everybody back to office, you start to see a switch from, let's just call it Lululemon, and, when people are at home and wearing whatever, right, to more like dresses and professional, let's call it attire and things like that. So Nordstrom's definitely going to benefit from that this year and next year as well. The other thing is special events. And Nordstrom benefits massively from people going to things like weddings and other special events. Nordstrom benefits in a massive, massive way from that. And so for those reasons, Nordstrom's going to do very, very well this year. The question is, how well are they going to do? I'm feeling pretty darn confident in their numbers, okay? Tuesday after the bell, we got a big earnings. Toll Brothers, which is a home builder, if you didn't know. And when it comes to Toll Brothers, here's the deal, okay? Everybody knows their numbers this year are going to be very good. Everybody knows that because they got this massive backlog from when everybody was ordering homes like nobody's business in 2021 and at the very beginning of 2022, okay? So home sales were great. Toll Brothers was selling homes left and right, and all those homes are basically being fulfilled right now or have been fulfilled already this year or are going to be fulfilled in the back half of this year, okay? Now, with Toll Brothers, I'm expecting them to report pretty troubling guidance. I'll be completely honest, when it comes to future bookings of homes, okay, new home sales. The other issue I think we're going to have with Toll Brothers is I think they're going to have to get analysts to realize that this company might not grow next year. Analysts still expect Toll Brothers to grow revenues almost 7% in 2023. I think Toll Brothers has got to start prepping analysts for the fact that they might not grow next year, okay? And I think it's almost laughable that analysts expect this company to grow revenues in 2023. Coming off of a year of 20% plus revenue growth this year, plus last year was a very nice year for Toll Brothers as well. I think it's laughable. I think management team's going to have to get out in front of this. Toll Brothers has been a public company for a long time. So I think Toll Brothers is going to have to get out in front of this and basically tell the street, hey man, I think you guys need to calm down about the EPS numbers for 2023 and the revenue numbers for 2023, because it's very possible neither of those numbers is close to what you guys have. I think the management team's got to get out in front of this, or they're just going to delay the problem. Let's just call it that way. And then it's going to be even a bigger problem for them. So I think they got to get out in front of this now, start setting expectations that, hey man, we're not feeling so confident over the next few quarters. And that's going to likely lead to a situation where 2023 numbers are in not the best place. If they get out in front of that, there's going to be damage to the stock no matter what, but I think it'd be healthier. And also, that would give us more of a reality check for the overall real estate market and get people to understand the realities of where the real estate market is at now at this point in time, which is not a good place. I think we're all looking at inventories skyrocket right now across almost every single state. Inventories are skyrocketing, especially across a lot of the states that Toll Brothers operates their business, okay? We're seeing sale prices start to come down meaningfully, and we're seeing a lot of the buyers have dried up, right? When you have low confidence, when you're coming off of a boom cycle, and you've had interest rates go through the roof for mortgage rates, that's a perfect storm for a very, let's just call it poor real estate market for the next, let's just call it year, okay? If not the next couple of years, but certainly for the next year, I think we're going to continue to kind of be in a tough place for real estate. Doesn't mean we get a full-on crash, like where prices drop 30, 40, 50%, but a very, in my opinion, healthy pullback and potential drop in prices. I think it's going to be healthier long-term for the real estate market. What we've had the last couple of years was very unhealthy. Prices skyrocketing like that, completely unhealthy for not just the real estate market, but for the overall economy. Because if prices keep skyrocketing like that, property taxes can potentially skyrocket for folks. That's not healthy. Then rents start skyrocketing for folks. That's not healthy. And then if you're going to look to buy a new house, it's so unaffordable, you can't buy a new house. That's not healthy, okay? So the fact is, I think we're in a tough real estate market for at least the next year, if not 2 years. I think a lot of these home builders are going to be in a tough market for the next 1 to 2 years as well. I don't think this is magically fixing itself. And I mean, if mortgage rates drop back down to 2.8%, shoot, that's going to be really good for the real estate market. It's not happening. Right now, we're in the 5s on an average 30-year, and we can definitely probably continue to be in the 5s or 6s for, let's just call it a considerable amount of time until eventually the Fed maybe turns, and then we kind of get a different situation going there. But the Fed's obviously not turning this year. Maybe 2023 is a debate, but not right now. We all know that, okay? So that's a big earnings. When it comes to Toll Brothers, they compete on the very, very high end of the market. The average selling price for Toll Brothers is $875,000. It's average delivered price, okay? Versus most of their competition is in the 300 or 400s. So this is very big. How are the high end buyers feeling? Because the folks that are Toll Brothers customers, those are folks that are least impacted by inflation. Think about this for a moment. Who's least impacted by inflation? The top 10% of income earners, especially the top 5% of income earners. Whether they pay an extra $1 for a container of Oatly at the store or a gallon of milk, it doesn't matter. Whether they pay $4 a gallon for gas or $5, it doesn't matter when you're in the top 10 or top 5% of income earners. But for everybody else, it matters in a meaningful way. But if these folks are even pulling back, that's kind of even a more scary dynamic for the market. So yes, that's going to matter in a meaningful way to the overall markets and to all the home builder stocks, the whole real estate market, and that whole kind of movement there, okay? Then Wednesday after the bell, we got Nvidia, which is obviously one of the best companies in the world. I think we all know that. Nvidia is going to be reporting earnings. Now, here's the deal with Nvidia. They already pre-announced about 2 weeks ago, and they said they're going to miss their revenue by about $1.4 billion, okay? $1 billion, which is an incredible number. Now, the problem with Nvidia is this year, their current fiscal year, they're expected to grow revenues 14.5%. They just pre-announced that they're going to miss numbers by 1.4 billion. So how confident is Nvidia that they're going to hit these numbers? How confident is Nvidia that they're going to grow at all this year, revenues? How confident is Nvidia that they're going to grow revenues double digits this year? I don't know. Those are big question marks, right? We're going to have to see what happens here, right? They got new products hitting the market, but, is there the selling volume on the other side, right? And then next year, analysts are expecting this company to grow 15.3%. We got to see, so I think the conference call is going to matter in a very big way for Nvidia. And when it comes to Nvidia, here's the deal. This baby shakes up the whole market now at this point in time. Even though the stock has dropped a lot, I mean, it's down about, about 50%. And it's 52-week high now at this point in time. Here's the deal. It's a $444 billion market cap. So this baby can push around all the semiconductor stocks, which is one of the biggest industries in the stock market, and it can push around big tech, and it can push around, honestly, the Qs. So, yeah, this one matters in a meaningful way, and if they come out with very weak guidance and basically are like, hey, I don't think we're hitting the numbers you guys think we're hitting this year, it's probably got a leg lower, and maybe we're going down back, I don't know if we're going down to 52-week low, but we could be going down to 160 range, 150 range, if that's the situation. If Nvidia is super confident, like, hey, yeah, we're going to hit numbers, back half of the year is going to tear it up, this stock is, I don't want to say it's going to skyrocket, but it's at least going to move upward in that sort of dynamic. But we got to wait for that to play out. So this is going to matter in a very, very big way. I don't know how many of you guys have ever heard this story. I've told this story a couple times, many, many years ago on the channel. But back in 2014, essentially, what I used to do is for a couple managers, I used to work at Quick Trip. I'd teach them everything I knew about the stock market back then, because I'd been in the market about 5 years. I made a tremendous amount of money, and I loved kind of just having people over my apartment. I'd teach them about stock market investing, things like that. One of the managers I taught, he brought me 2 stocks. One stock was Wendy's. And I think it was Wendy's, if I recall. And I was just like, no, okay, no. And the other stock was Nvidia. And the thing with Nvidia was I didn't see it back then. I'll be honest. And Nvidia wasn't this super respected company. It was, what it is nowadays. People forget that these companies become a super respected company over time. Like Tesla used to be considered a joke. Apple, back in 97 was considered a company that was going to go bankrupt. Google was considered a fad that was overvalued. Facebook was considered a fad that was going to become the next MySpace, right? And that's just how it went for all these companies. Amazon was considered a money burner that was never going to make any significant cash flows, and they were just going to burn money forever. And so, I watched all these companies kind of play out, and Nvidia was never the super respected company that it is today. But back then, I didn't really see it. And, the stock's gone up about 4,000% from when, my friend there brought that stock to me. I hope they bought it, man, because they're probably good for life now. That's all I can say about that. Good for life, man. Imagine, he put 100K in it, back in 2014. Jeez, he'd be sitting pretty darn pretty nowadays. Let's just put it that way, okay? Snowflake is reporting Wednesday after the bell. So this one matters because this is obviously a higher valuation name in let's just call it the SaaS space. And, there's a lot of things you could throw into the SaaS space. But this one's going to likely move a lot of the data-related companies. It'll move a lot of the cloud-related companies. In regards to this one. And when it comes to this one, Snowflake, okay, it's going to... Everybody that's a Palantir shareholder is going to be looking at this one. And Palantir is a stock I bought recently, and I hope to buy a lot more shares. But basically what happened is Palantir reported a quarter that a lot of people were very disappointed in. They came in with revenue growth of like 23, 24%. A lot of people are very disappointed at that, okay? And so everybody's going to be looking at Snowflake because people consider Snowflake as the closest competitor to Palantir. Right? A lot of people say there's no real true competitor to Palantir, which might be fair, but people consider if you're going to throw a company out there, it's Snowflake. And so if Snowflake comes in and just blasts the doors off and destroys their numbers, right, and beats all the analyst estimates easily, then people are really going to look at Palantir and be like, what's going on here, man? You guys didn't come in with numbers. So the best thing for Palantir shareholders in this situation is that Snowflake reports a blah quarter, and it's not too exciting because that means like it's just a tough environment in general. No one wants to see Snowflake doing great when Palantir potentially struggling as far as their numbers in the most recent quarter. And I've covered all this on my new channel. I don't know if you guys have seen my new channel or not. It's a very original name. Jeremy Lefebvre Makes Money. But, I covered this from a couple different standpoints. This is a reaction channel where I would just react to content on this. I don't make original content like this is. I react and give my opinion on other people's videos and things like that. And one was a YouTuber that had sold out completely of their Palantir stock. I reacted to that and gave my opinion. And the recent one I did yesterday actually was in regards to a YouTuber who's not selling their Palantir and holding it and kind of covering, from all those different angles and kind of giving my opinion on that. So I think that's going to matter in a big way for Palantir shareholders and anybody that's in any of the SaaS related stocks. Snowflake will matter on Wednesday. So yeah, it's going to be a crazy next few days in the market, guys. I hope you guys are ready for this. As always, I appreciate you joining me. Once again, if you're looking to join us in the private stock group, the private Discord chat, get access to everything like that, check out pinned comment down there, apply to join us in there, and we'll see if we can get you in there this week. Much love as always, and have a great day.